given. It's the best performing asset in all recorded history in the shortest period of time. And it continues to be the gift that keeps on giving. Everyone writes it off every time it does a down 80%, and 18 months later it's back at all-time highs, making everybody look like idiots. So the game is not to fuck that up. And the classic way of doing it is using leverage. Here is an asset class that goes up stupid amounts. And for some reason, that little voice in your head says, you know what? If I just got 5 or 10 times levered, I could make 10 times as much. What, are you bananas? It goes up 100, 200, 300% in a year. You don't need leverage.
On Tuesday, shortly after 10 a.m. Eastern Time, Bitcoin, the world's leading cryptocurrency by market cap, rose sharply to $69,340, a new all-time high record for the flagship cryptocurrency. The rise was, however, brief, as prices quickly pulled back, dropping to around $62,185 by 4 p.m. According to numerous reports on social media platform X, a Bitcoin whale was partially responsible for the price dip. The mega whale sold about 1,000 Satoshi-era Bitcoin when prices hit an all-time high on Tuesday. According to the reports, the whale might have gotten each coin for less than 50 cents in 2010, but the coins were worth over $63 million when they were sold on Tuesday. In addition, as Bitcoin hit a fresh all-time high, then tumbled to as low as $59,700 after a subsequent sell-off, over $1 billion worth of leveraged derivative positions were flushed out across all digital assets, according to data from CoinGlass. About $870 million of the liquidated positions were longs or bets on rising asset prices. In a recent video posted on the Real Vision YouTube channel, renowned macro analyst and former Goldman Sachs executive Raoul reacted to the dip and the massive $1.1 billion of liquidations caused by investors using leverage. According to Pal, this is one of the 2 ways to fuck this up and miss the insane opportunities that lie ahead for cryptocurrency investors in 2024 and beyond. As we bring you clips from Pal's video and more, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Also, ensure you drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
You've got to think of crypto as the most ludicrous market you've ever been involved in. It has the highest returns, the highest volatility, the biggest drawdowns, the best memes, the most stupidity, the most angry people who hate you because you're involved. It's like everything in the world turned up to 11. So it's the most befitting thing in the world where everyone gets super excited about new all-time high in Bitcoin. It prints the new all-time high, does a massive reversal, and everyone's like, oh, we're poor again now, you know. And it's kind of like the other thing about crypto, unlike traditional markets, it's so easy for regular people to have leverage. So for some reason, even though you warn people and tell people and beg people not to take leverage in a 70 vol asset, they still do it. And so what happens is it might even be just a small position, but it builds up because they all get confidence. Then something happens and it's like you get liquidated, you all get liquidated. We cleared out, I don't know, it was $1.5 billion of liquidations in Bitcoin in like half an hour. Market resets and off we go again. So it's kind of, you have to think of it as a computer game. It's so ridiculous. But you know, as you know, I don't trade any of this stuff. I mean, I was buying all of my crypto back in November, December 2022. I don't think I've bought anything since January 2023. And I've just done a few asset allocation shifts. You know, the idea is just to own your spot, own it for the cycle, and just do nothing. And it's really as simple as that. You get paid to do nothing. I mean, most of this stuff, Solana was up 10x last year. Bitcoin was up 160%. Everything's up 50% this year to date. You don't have to do anything. You don't have to do anything at all. How you got to think about it is we're getting to price discovery phase in Bitcoin, and most of the other crypto will catch up and we'll all get to new all-time highs in the quality assets. You know, the shitty stuff won't do, but the quality assets will go to all-time highs. You don't know how high they go. Usually it's somewhere between 3 and 10 times the previous all-time high. Okay, so even when you're at the all-time high, you've got significant upside from here. If we're not at the business cycle point where things turn lower, which tends to be later on, 2025, later in 2025, maybe if it comes earlier, it's the end of 2024. Either way, that's when you get larger drawdowns. So you're going to see 35% liquidations, but you've probably got a worst case 100% rally from here, and the best case, whatever, depending which asset you choose. So the risk reward is always good. So if you are on the sidelines, look, for most people, you hold less of an asset that's so volatile. So you own less of it. And days like today, when there's liquidation, that's a great day to put some money at work. Now, is this the low today? Who the hell knows? Could it go low for the next week? I don't know. But if it does, you should think of it as a gift. For me, it's not a gift because I have no more money to put into crypto. So I just have to watch it. But that's what these are for. So you should not be scared of them. If you have a thesis and you understand and you think, okay, this market's going to go higher over time, then use sell-offs to your advantage to get slightly better entries where, it's less frothy, because it never feels good to buy something and then it goes in your face 10, 15, 20% before rallying. It's always that always leaves a bad taste in your mouth. It's always nice if you can buy something that's on sale for no real reason except people are liquidating positions because they got overexcited. That's a nice time to stop adding to it and stop FOMOing, because today was a classic FOMO day, right? Most people were like, it's broken all-time highs. And don't do that in crypto. It will make you look stupid. And just have a plan, stick with it. Don't use leverage. Use the right time horizon. Unless you know how to trade really well, like Tony, don't touch it in that time horizon. Just buy and hold it and forget about it.
In one of his latest posts on X, Pal further emphasizes the importance of patience, proper planning, and not making careless decisions if you want to maximize the potential of the bull market. The post, which was made after the price decline, reads, "And still, half of TradFi fades the biggest macro trend of all time. In the best performing asset class of all time, in the shortest period of time. And still, they don't realize that the drawdowns are what creates the ludicrous opportunities, and that all it takes is to buy and hold on longer time horizons and compound the insane returns by adding during cyclical bear markets." In his post, Pal further notes that crypto does not fit into any traditional risk-reward metrics, as it is so skewed to the upside. Pal reminds his 1 million followers that all assets are 100% correlated to central banks' money printing activities, but crypto is the best performing asset with the best risk-adjusted returns. Diversification doesn't pay in this new world, Pal continues in his post, adding, "They will produce charts of the tulip bubble every single cycle, and they will be wrong again because they can't understand a secular trend. And yes, we also fully understand that there is no mania like cryptomania, and we embrace it. We also know that it then goes down 75+%. We fully understand that it is the most reflexive asset on Earth, on the upside and downside. All we have to do is not fuck this up." On the issue of not fucking this up, Tether co-founder William Quigley recently shared reasons why he believes the bull market is just starting, and Bitcoin could still get as high as $300,000 before the bull market ends. Here are clips from William's recent interview with CNBC.
If you look at where we are pre-halvening, that's going to happen in April, where Bitcoin's reward for miners drops by half. If we look at where we are versus the last one, I'd say, which happened 4 years ago, we're in better shape. Obviously we didn't have the ETFs back then. If you look at things like derivative volume, it was nascent 4 years ago, now very high. We've just hit a record. And the ETF flows have actually surprised me. I was a little skeptical that they would take off quickly. And now we have close to, I want to say $50 billion. It's about 740,000 Bitcoin held in these ETFs. Daily, we're getting between 150 million up to $500 million flowing in. So there's a lot of positive forces that are pushing Bitcoin up right now. And this is before the halvening, which is usually after that fact when Bitcoin really skyrockets. Anything from like pre-2020, there was very little institutional interest in Bitcoin. It was a retail-driven, globally retail-driven phenomenon. And now I would say there is a lot of institutional money that tracks it. It's also why you see such interest in derivatives. The volatility in Bitcoin, I think, is one thing that really attracts a lot of institutional investors. And you have to understand that, Bitcoin is maybe the only globally traded asset that I know of whose demand is purely based on sentiment. There's not a Bitcoin company. There isn't Bitcoin price earning ratios. It's just a sentiment driven token. And what you can say about that, of course, is that sentiment has no limits. You can always be more optimistic. And so this rally may be the biggest we've seen. If we just look at where we stand today, pre-halvening for Bitcoin, and look at historical patterns, that would suggest, and I'm not predicting this, I'm just saying if you applied the historical patterns, it would suggest Bitcoin being in excess of $300,000 at the peak of this next bull market. And since all tokens are correlated to Bitcoin, that means that all the other tokens like Ethereum and Solana and some of these others will move up in lockstep. Those, however, usually move higher, directionally the same, but since they have a lower market cap, they tend to move up to a greater degree.
In related news, the spot Bitcoin ETFs have continued to extend their record-breaking streak this week. On Tuesday, senior Bloomberg ETF analyst Eric Balchunas posted a really impressive update about the ETFs on X. His post reads, "Milestone. The 10 Bitcoin ETFs did $10 billion in volume today, smashing the previous record set last Wednesday. Volatility and volume go hand in hand with ETFs, so I'm not totally surprised. That said, these are banana numbers for ETFs under 2 months old. BlackRock's IBIT, Fidelity's FBTC, Bitwise's BITB, and ARK Invest's ARKB, all with record days." According to the latest data from BlackRock's website, as of March 5th, IBIT had amassed 183,345 Bitcoin, worth almost $12 billion. BlackRock added over 12,000 Bitcoin to its holdings on March 5th alone, an all-time high single-day accumulation for the world's largest asset manager. What are your thoughts on Powell's and Williams' ultra-bullish outlook for the crypto bull market? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.